Good morning, good afternoon, good evening, wherever you're located on planet Earth. It's time for the PulseWave Report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Reports. Ladies and gentlemen, is this the calm before the storm? I don't know. You tell me. But something is brewing today because we're having a breakdown in the markets. That's right, ladies and gentlemen. We're having a breakdown. Everything is negative, and that's not supposed to happen. You have the Dow negative. All the U.S. stock indices are negative. Gold and silver are also down today. Bitcoin is down today. Bonds are down today, and so is the U.S. dollar. All in negative territory, ladies and gentlemen. How do we explain this? Where are my economists and my financial engineers? Where are they at this morning? Can you explain the correlations being non-existent this morning? What's up with the negative correlations? They don't exist. Everything is basically 100% correlated today. U.S. stock indices, gold, silver, bonds, and the U.S. dollar and Bitcoin all in the red this morning. Where's the flight to quality? People are dumping stocks. People are dumping Bitcoin. People are dumping gold and silver. People are dumping bonds. And people are getting out of the dollar. Where is all this money going? Is it going under the mattress? Or is it going someplace else? We need to discuss this morning. You know, I've been in the lab heavy for a minute. You all know this. And it seems like when the cat is away, the mice will play. Well, they have been playing on since I've been in the lab brewing and working on what I'm working on. And look at this. You step away for a split second and everything is melting down. But food is becoming priceless. You have beans still in the teens, up 14 and a quarter this morning. Corn up 6. Wheat up 2 3/4 points. How do you explain this? Both corn and wheat are up almost 200% just in the last couple of decades. In the last 20 plus years, ladies and gentlemen, how do we explain this? Soybeans are now more than 300% increase in the price of soybeans just in the last 2 decades. That's it. 300% increase in beans, 200, getting close to the 300% in wheat and corn. Are things getting out of control this morning? Why is everyone fleeing like rats in a ship on the Titanic? Why is everyone jumping, and where is the money going? Normally, the way these markets were designed is that when the stocks are down, there is a flight to quality. People are putting money into gold, silver, precious metals, and bonds. And then, of course, there's a flight to the dollar. That's not happening this morning. That's not happening this morning. Bonds are in the red. The dollar deep in the red. Yeah, that's right. Bitcoin down almost 7,000 points. Gold and silver in the red. Stock indices in the red, all of them. Dow, NASDAQ, S&P, and the Russell, my hustle. All in the red. What is going on? Are the markets becoming unhinged? Maybe it's all this talk of World War III. Maybe it's all this military armament being maneuvered around in the Middle East. Maybe it's what's going on in the South China Seas. Maybe people are starting to wake up to the realities that are before them. Ladies and gentlemen, this morning we have what we call in the trading lingo, we have damage. We got technical damage on the chart this morning. We got some technical damage. All right, we do. We can't ignore this. Now, I will say, it's going to depend a lot on how the markets close. Remember what I told you. I've taught you that, guys, this. The open does not really matter. It's where we close, where we settle. Today's close will say a lot about the health or lack thereof of the market. Is it time to sell everything? Is it time to bounce? Do we roll out? Is it time to roll out? Is it time to take the money and run? In the words of the late, great Chuck Brown, run, Joe, run, Joe. The police binds at the door. Run, Joe. Is everybody running? Is it time for Joe to run? The police bond won't let me go. Is it time to run? That's what we're going to be looking into this morning. We're going to look into what's going on. Give you a little bit of clarity. Give you a little bit of what's what. All right. Some of these markets, this is pure noise, and we know it's pure noise, and so we don't really care. But then in other situations, we do need to talk. Okay, so let's break it on down. Coming into today, the Dow Jones futures has a bullish continuation. Overall pattern is the bullish continuation. So today's pullback in the Dow futures is not at all problematic. Technically speaking, there's no technical damage on the chart, but it does depend on where we close. If we were to close where we are right now, then I would have to say there's no technical damage on the chart, and it is what it is. However, the Bitcoin futures coming into today had a crash alert, and where we are right now, we do have some technical damage on the chart, and we are now confirmed bearish in the Bitcoin futures. However, you got to keep this in mind. When it comes to the Bitcoin futures, it does not trade over the weekend like Bitcoin. Bitcoin never closes. However, the Bitcoin futures do. So that 2-day gap is a real gap that has to be dealt with, has to be reconciled. So we do take that into consideration. But nevertheless, we do have a situation in the Bitcoin futures. All right, we gapped down this morning in the Bitcoin futures. Okay, so we know that the gap is going to have to be filled at some point. Coming into this morning, the E-mini S&P 500 also had a bullish continuation. All right, and we take a look at where the market is right now. Technically speaking, from a technical perspective, we do not have technical damage on that chart either at this point as of right now. It could change. We're still early in the morning. Things could change. Depends on where we close. How about gold? Coming into this morning, believe it or not, gold also had a bullish continuation. And so far, today's pullback is showing no technical damage on the chart. What about the NASDAQ? E-mini NASDAQ 100. What about that? Well, coming into today, we had a bullish continuation pattern also in effect, and today's pullback so far has not produced any technical damage on the chart. Still in a bull market. But the big one is, what about the Russell Mahasel, the weakest of the sisters? Well, the truth of the matter is, ladies and gentlemen, the Russell came into this morning with a bearish continuation pattern, and guess what? We have no technical damage on this chart, either on the bull side of the scale or the bear side of the scale. This one, technically speaking, is neutral. I know that sounds crazy, but it is what it is. Just giving you the real. All right. What about silver? Well, silver had a bullish continuation pattern coming into today as well. And so far, there's no technical damage on this chart either. And I'm looking at the dailies, not the weeklies. So we do have quite a bit of a mixed picture this morning. So you can actually say, you know what, this pullback, it don't mean really a whole lot. You know, it's significant, it's real, but it's not a whole lot. Now I'm about to blow you out of the water with another little fun fact. All right, you ready? If you take a look at Bitcoin and where it has been and where it is currently on a trajectory of going, truth be told, if we were really to keep this all the way 100, the technical damage on the Bitcoin chart was already underway. Okay, so it is heading south at this point. That's something that we already knew coming into today. However, for today's perspective, we are not even really technically pulse-waving negative yet in the Bitcoin, and that is why so much well, not the why, but it's because, I should say rather, because of so much that's already been baked into the cake. So here's your current Bitcoin live chart right now, and you can see here is this bearish pointer that was made yesterday, okay? The market is on its way to come down and take that out. That's where that challenge is right now. So this is what we're watching. But we still have a long way to go before we say officially the market's pulse-waving negative. Right now, it's not. It's bearish, but it's not pulse-waving negative on the day. As you can see here, though, these last several days, you got a guaranteed down channel bearish configuration. All right. But overall, on the day, technically speaking, we don't have any technical damage yet on the day. Not until we drop further. We need to drop down here before we start saying, oh, now we're pulse-waving negative and we got, on the day, and look out below. All right. If we trigger today on the downside, the next downward target, or say the target on that particular move, is going to be around the 4,300 mark. Yeah, 43, high 42-ish will be the target, and that's this bearish pointer right here. All right. The next support is not until you get down here with your bearish pointer, which is at the 28,000 level. All right. I know that's mad wreck if we get that. So far, the volumes on today look like this. So we got significant from yesterday, but today's volume is nowhere near yesterday's volume. Okay. Everybody see that, right? Here's the volume from yesterday, mad crazy selling. And then here's today, not as much. Okay. So we do have a bearish pointer going on right now. All right, created from yesterday in Bitcoin. So we're going to wait and see if we pulse-wave negative or not. If we do, then that's when the panic selling begins. And we do have a lot of downside to fall from here. And so it is what it is. Just wanted to point that out to you guys, just so you could see what's going on. All right. Let me pull up some others real quick. Let's take a look at, let's see what Ethereum's doing right quick. All right, so as you can see here, the altcoins are following suit with Bitcoin. Same pattern. Bearish pointer created yesterday. Market's coming down to take that out and meet that, okay? Next support will be down here. Then the next one after that is down here. The one after that is way down here. All right. We got a long way we could drop. Look at the volume yesterday, a lot of selling. For some odd reason, these cryptos are getting a lot more volume on the weekends than they traditionally would get. Traditionally, you don't really get a lot of participation, especially on a Saturday, but on a Sunday. See, this represents Sunday. Sunday is when the markets reopen as far as forex and futures worldwide. That's why you see this big open interest on Sunday. Sunday is a big day. Sunday is a big day. All right. That's why you see that. This is normal for Sunday because technically Sunday is the beginning of the trading week worldwide, not Monday. Stocks open on Monday, but futures and forex and cryptos are on and popping on Sunday. Okay. This is why you see that there. So this is right here. This is Ethereum. You can see Ethereum is following suit with its elder Bitcoin. All right. What about the XRP Ripple? Let's take a look at that. And you will see the same situation. See, same thing. All right. Identical chart pattern. Here's here's Sunday. Look how high the interest was on Sunday. Look how high the interest was on Friday. All right. And then here you are now. So with this XRP Ripple, if you go PulseWave negative today, you're not going to stop for a while. You probably won't stop until you take this pointer out back down here, which is at 35.88. I'm just saying. All right. I know. Shocking. All right. Next up, we got. Let's take a look at DOT. All right. Let's take a look at DOT. All right. So on the DOT, here is Sunday's big open interest, and here's that bearish pointer. You can see we're coming down. Okay. If this one PulseWave is negative, the initial target is going to be the 2760. And then the next one after that is this super bearish pointer down here at 23. And then after that, you're wide open with no more supports. I'm sorry to tell you that. All right. So we have the potential for things to get a little ugly. All right. Just a little ugly. And that's why I had to bring this out so you could see these charts so we could know what's going on. All right. So like I'm saying here, we got action. Okay. But on the day, we're not really seeing any self-destruction just yet. But it's looking like it's getting close, like it wants to do a little something. Equities, like I said, are not as impressive. To use surgeon lingo, I'm not impressed with today's market action in the on the futures, on the equities. I'm not really impressed at all. Let me show you the Dow real quick, just to give you an idea what I'm talking about. Not impressed at all. Okay, let's see. Here we go. All right, as you can see, I am not impressed. Here's your Dow. This is the daily chart on the Dow. We're not doing anything. Like I was telling you, we haven't broken any supports. We have no technical damage today on any of the stock index futures. So that's the Dow. But I know the real one that y'all want to see is the NASDAQ. So let's see that one real quick. All right, here's your NASDAQ. Okay, let's make this. So here's your NASDAQ. Okay. NASDAQ is not, it may look a little impressive when you pull up the daily chart, but not really. All you're doing is just getting a little fluff out the way. All right, but you really aren't, you're not going in. You know what I mean? You're not really going in. Not like that. Not like you think. So because of that, this one also, from my perspective, remains unimpressive as well. I'm not impressed with that pattern either. Not right now. I'm not. Let me just pull up something else here. Bear with me. I'm just looking at something. Let's just see here. All right. Yep, I was right. I was right. Looks like I was right. Okay, so the NASDAQ has to do a lot, and it needs to do some stuff in order to be um, in order to see some price destruction on the chart. And I'm pulling that up now on my algo chart. Just bear with me just for a second. Just want to coordinate. Want to see, confirm something real quick. Yeah, that's what I thought. Okay, so all right. So at wait a minute. Wait 1 second. I was looking at the wrong thing. All right, I was right. I got it now. I got what I needed to see. Hold on. Let me just pull up one other thing. Yep, I was right. Okay, so technical damage on the NASDAQ is not either. We still got quite a ways to move on this NASDAQ 100 before I say we got real technical damage. We don't have it yet. All right, so the NASDAQ is just pulling back. We're not in a full blown correction, folks. We're nowhere near correction territory yet. Not saying it can't happen, but we're not there yet. All right, so there's no panic. Yeah, we got an intraday pullback from an intraday perspective, yes, but there's no panic. All right, now this is just the daily chart. Let me pull up that weekly. Gives you even more insight. See, from the weekly, do you see anything bearish on the chart? No, you do not. All right, on the daily side, we flip it back over. Do you see anything bearish on this chart? No, no, you don't. No, you don't. On an intraday perspective, yeah, mad bearish. If let's say you got long Friday, right? Then you'll be a little bit worried. If you got long and held over the weekend, then you would be a little bit more concerned because now you are the last man holding the bag. You happen to get long on the last up day, and now you're in a pullback. And now your question is, will I get stopped out? Probably not. Probably not. But it's a possibility because you're experiencing a pullback day. So what you're hoping, if you came into this market long from Friday, if you were holding QQQ or SPY or DIA or whatever long index ETF or whatever, your concern then is what you're hoping is that we don't drop too much further, and on top of that, you're hoping that tomorrow will be a turnaround Tuesday reversal day where it'll be a buy day. So those who didn't get long on Friday or even Thursday for that matter are saying, oh no, I missed an opportunity, but now I got another opportunity to get long. So I'm anticipating that as long as today is not a true drop, when you start shouting correction, you should get bulls back in here buying tomorrow. Those that missed Thursday and Friday, they're going to be in here shopping because today is a sale day. Today everything's on sale. People should be shopping. All right, so that's what you're thinking on this one. All right, if we take a look and roll over, I just want to look at one. I'm going to show you gold real quick. See what I mean with gold? Okay, so you popped, right? And today is just a pullback. You don't see anything bearish on this chart either. So what I'm showing you guys is no reason to panic. Today is just a discount day where things are going on sale. So those who are bullish are looking for an opportunity and a place to hit the buy button. Same thing with silver. As you can see here, silver futures, there's nothing to panic about, right? Not really. However, these bond futures is a little bit different story. You see, we're bearish, ladies and gentlemen. This is a bear market. You had a little bit of dead cat bounce off the lows of 153, but here we are. All right. So yeah, when you see these bond prices rise, what happens to your yields? They fall back down again. Yields were on and popping for a minute, right? For a minute. And now all of a sudden they got the interest rates in check. But this is still whack for the US bond market. I'm sorry. Whack. All right. Just calling it what it is. Just calling it what it is. All right. So where do we go from here? Heck if I know. It's Monday. Mondays typically are very quiet, very slow. Not a lot happens, just the market gyrations. On that rare occurrence, you can get a Black Monday. When you come in here and the Dow's down 500 points. Those things, those days happen too. Those days exist, but thankfully those are few and far between. And as far as the cryptos go, like I said, nothing to see here. I wouldn't get too excited. If you're a PulseWave subscriber, then you are already having fun. You're already short Bitcoin or DOT or XRP, and you're just having fun. You're just enjoying life. So I would say to you, keep right on doing what you're doing. You don't have to make any moves. You don't have to make any sudden decisions. You don't need to panic. You're in a really good place right now. All right. Pulse waivers are in a really, really, really good place right now. So nothing for you to worry about. But for the rest of you who are not PulseWave subscribers, today is a really good example of what you are missing and what you need to be doing. You need to subscribe so that you can get these PulseWave reports delivered to you on a daily basis, so you'll know when you need to take action and when you shouldn't. There's another old saying: just because your long position got stopped out doesn't mean you should get short the market. And just because your short position got stopped out doesn't mean it's time to get long the market. All right. Sometimes those gyrations happen, and that's good because now the market's forcing you to take some profit off the table. But the majority of the time, it's just a signal to cash out and get ready to get back into that position and follow the prevailing trend until it exhausts itself. So that's what you're doing. In a bull market, you're always buying, you're always getting long, and you're always taking profit. In a bear market, you're always selling short, and you're always taking profit. That's all you're doing. You're just looking for opportunities to take profit regardless. All right, that's what we do. Buy and hold is not what you do. This is not that market anymore. It's not a buy and hold market. It really isn't. And if you take that approach, you're going to get smoked, because markets can have these dramatic pullbacks and corrections, and it can shake a lot of people and shake their confidence. You don't want to be one of those people that are pushed around by the market. Every time the market hiccups, you panic and figure you have to go and you have to sell something, or that you should even buy something. That's just not the nature of these markets these days. It's a whole different ball game, and you have to know that. You have to know what the game is so you can be abreast on how to play it. And right now we're looking at algorithms, machines, robotics. All right. A lot of these mutual funds and hedge funds, they don't even use people anymore. They use machines. Now, I know some of you who have listened to me throughout the years, you've said, I'm not trading, that's gambling, blah, blah, blah. So I'm going to let you in on a little secret, because you may not be privy to this, and I understand. So let me enlighten some of you. Everyone on the planet just about who has a job is a trader. All right? You're trading the markets whether you know it or not. All right? Rather directly or indirectly. Everyone trades the market. Everyone. From Nancy Pelosi to the president to the dude working in a middle income type job, whatever. Anyone who buys a mutual fund, anyone who has a 401k, you're trading the market. The only difference is when you're buying a mutual fund or contributing to your 401k, you're just hiring someone else to do the trading for you. But mutual fund companies are trading too. Well, I put my money in a non-managed fund. It doesn't have any turnover or whatever. No, someone is still making investment decisions. Whether you want to admit it to yourself or not, someone is still making investment decisions. I don't care if your mutual fund only trades twice a year, still trading. Someone's making a decision to put money to work somewhere. All right? And before you get all high and mighty, you need to understand something. All right? If there were no speculation, there would be no markets. There would be no investment. There would be no stock market. Did you know that? How you figure? Well, if all you had to do was buy a stock in a blue chip company and go about your business, then no one would make any money. Did you know that? If no one wants to buy something, then what happens to the price? Supply and demand, the price goes down. The only reason why we have bull markets, whether it be bull markets in gold or silver or Bitcoin or Amazon, is because someone wants to buy and someone is willing to sell it. If all people did was just buy and hold and never sell, you wouldn't have any capital gains. You would have no capital appreciation. The reason why prices increase is because there is little supply and a lot of demand for the product. All right? Supply and demand. When demand is high, prices go up. When demand is low, prices fall through the floor. You need to understand those economic principles when it comes to investing. And that's the same thing in real estate. I don't care if you're trading in old automobiles or baseball cards. I don't care what it is that you're investing in. If no one wants it, then the price is going to fall through the floor. I don't care what it is. And it will never go up. The only reason why prices increase, whether we're talking about housing prices or automobiles, is because more people want that particular item than are people willing to sell it to you. And that's just the bottom line. Supply and demand. Supply and demand is what navigates these markets, and that enables you to have capital gains. Amazon stock would still be at the same price it was during its IPO if no one was interested in buying it. It'd probably be a $30 stock today or less. Did you know that? Because no one wants to buy it. But if everyone bought who wanted to buy and then just held it and never got rid of it, guess what? The price would stagnate wherever it ended up on the IPO the day the people bought. That's it. It would not go a penny higher because no one wants it. People who already bought, and they're holding it for life, and they're never going to get rid of it. And so the price has nowhere to go but down until people want to buy it. And that is how trading, that is the foundationals of trading. The only reason why Dogecoin is going up, or Theta, or any other coin for that matter, is because people want it. Limited supply, outrageous demand. Prices go up. So keep that in the back of your mind when it comes to investing, trading. All investing is trading, but not all trading is investing. Just remember that. All right. Supply and demand, and you are concerned with price. I don't care who you are or what it is you're doing or what your time horizon is. You do care about price. If you buy a stock today and you hold it for 20 years, you're hoping that 20 years from now, the price will have increased significantly beyond the price where you bought it 20 years prior. If it hasn't, then your investment has blown up in your face and has not performed. And now you've lost the time value of that money, and opportunity cost and opportunity loss. All right. So don't ever think, oh, I'm not trading. That's gambling. I'm not speculating. You are. Either you're paying someone else to do it or you're doing it yourself. And you could be doing it unaware. And for all you people out there, oh, I'm against, shell oil. I'm against, hurting animals or whatever your thing is. If you have a job and they offer mutual funds or 401ks or whatever investment plans and you contribute money to it, you are contributing to those industries, whether you like it or not. You have no way to know what they're doing with your money. Oh, but they have a prospectus, and every quarter or once or twice a year they show you what they've done. Yeah, but by the time that prospectus comes out, it's old news. The fund manager may have already gotten out of those and into something else. So don't ever think that you're not getting into, you're not putting money somewhere, because you are. And here's another little secret. Let's say you like, oh, I'm a vegan and I'm against anything that has to do with animals and killing animals and eating animals or wearing fur of animals, and I don't put my money there. Where I don't shop at those places, but whatever. I grow my own vegetables. I'm good. Yeah, but here's what you don't know. You don't know that the person that you're giving your money to for whatever goods or services are not putting that money to work in those spaces. So you are de facto still contributing to it. The fact that you still live and operate in a society, you are contributing to those things, whether knowingly or unknowingly. How do you figure? You ever took an Uber before? Okay, yeah, once or twice. Okay. Well, how do you know that Uber isn't taking the money that you just gave them and is not funding, let's say, child sex trafficking? Of course, they're not doing that, but I'm just saying, how did you know if they weren't doing that? See what I'm saying? You don't know what someone's doing with the money that you're giving them for whatever goods or services. So because of that, you are unknowingly contributing to a lot of things that if you knew, you'd be angry. Or those of you who have a job and you have a union and you pay union dues, you don't know and have no control over where that money goes. All right. Your union can decide, you know what, we're going to back this president or this party or that party. And you may not like it, but you have no say over it. You can't control any of that. So you control what you can control and don't worry about everything else, is basically what I'm saying. All right, so this is a Monday. It's, very interesting Monday, but at least coming into today what's going on. So there's really no need to panic on the price action that we're seeing, even though like with the Bitcoin, it's quite significant. All right. But I'm just saying. All right, this is just the ebbs and flows of a market, and what goes up does come down, and whatever goes up the hardest comes down the hardest. So that's what you're seeing with Bitcoin. Okay. All right, and just to give you a little bit more of a push and a little bit more of a nudge this morning. Did you know that China is now calling Bitcoin an investment alternative? That's right. The country that after these past several years have been cracking down on cryptos and, having negative things to say about it, and they're finally coming around and saying Bitcoin is basically the future. And that's because at the end of the day, all nations know that the blockchain is the new thing, and they're going to have to be part of it whether they like it or not. Okay. And a lot of people now are taking today's pullback in the U.S. equity market and saying, see, the stock market, man, is over leveraged. It's about to collapse. Ooh, stock market crash. I guarantee you I'll see some ads like that in social media. Ooh, stock market crash, stock market crash, stock market crash. Well, I'm here to tell you not to listen to any of that garbage, because this is not a crash. What happened in March of 2020, that was a crash. All right. This is not. This is on some other stuff, okay? So no need to panic. Not at all. And aside from all the saber rattling and World War III talk, that's the thing you really need to pay attention to. Is all this this war talk, the stuff that they're not really that they don't really want to talk about in mainstream media. All right. Now, I got peoples overseas in different places, and some people who live here in the States, they have access to their news outlets in those countries, okay, in their native tongues. And you'd be surprised the news that they get over there versus the news that we get over here. It's not until you get outside of the US that you realize that you are the most deceived and intellectually impoverished country on the planet. And I'm not being mean when I say that. The average US citizen has no clue what's going on outside of their country. No clue. No clue. Because they're keeping you dumbed down with ridiculous stuff. They got you focusing on all the wrong things. And they give you the causes that they want you to be concerned about. But I'm here to tell you that things are brewing overseas, ladies and gentlemen. The United States of America has been acting as a provocateur and been provoking a lot of countries into some type of military action. Who was it? Gerald Salente, I think. What do you say? When they've done everything else, they take you to war. Well, that's kind of where we are right now, because war is a racket and war is profit. And the only way that they can save things is probably, kicking off some type of war. But I'm going to leave you with this today. If lockdowns are needed, why did more people die in states that locked down than those that didn't? If lockdowns are effective and necessary to prevent hundreds of thousands of extra deaths or the equivalent for the size of the population, then those states which didn't lock down should have a far worse death toll. That's just logic, but they don't. Just something to think about. Again, proving just how dumbed down the American citizen is and just how the, quarantined the average American citizen is. Everything is sanitized by the time it gets to you. Redacted and blacked out. All right, just something to think about. All right. Another thing too that was very interesting is that we've seen an unprecedented demand for RVs. RV sales hit a record in February. All right, and they're looking for a blowout year. And this is in RVs. And the reason is because a lot of people know that they're about to become homeless, and at least they can live in an RV and be mobile. Okay, just saying. A lot of people are being priced out of the housing market altogether. Okay, they're priced out of home ownership and personal property, and property taxes going through the roof. Okay, so just saying, RVs, supply and demand. So if you thought you were going to get an RV, well, the time they've gotten an RV was when none of this was going on, because now they're going to be priced. You could be priced out of that too. I mean, a lot of those were already expensive enough, especially the really tricked out ones. But just saying, ladies and gentlemen, signs of the times, right? Sign of the times. So I'll leave you guys with that. Remember, hit that like button, man. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.